We're mad about markets, but turns out we're not the only people mad about markets. A lot of them entered the stock markets in the last 2 years, and they're equally passionate, much more savvy, and they want a lot more. Who are these people? We try to profile them. I'm Manglam Malu. With me is Ritu. Hi, Ritu.
Hi, Manglam. Have money, will buy. That seems to be the mantra of these new age investors who seem to have an insatiable appetite to invest in the markets. To delve deeper into this, we did conduct a poll on our social media handles, and that gave us a really good insight into the behavior of these investors that are now coming to the markets only in the last few years. But why are we talking about them today? We'll tell you through our segment, which is called the Number Crunch. Now, retail shareholding in NSE listed companies stood at 16%, which is currently at an all-time high. And at last count, the total number of active traders or investors on the Bombay Stock Exchange, that stood at 7.8 crores, which is a 45% jump from the number of investors than we had last year.
And it's swelling by the moment as we speak. 8 crore people, that's bigger than most of the developed countries as well. And the number of people that we're adding every month itself is more than the population of a lot of these European countries. So one doesn't have the exact age profile of these investors. There's no quantitative data to suggest that yet, but anecdotal evidence, people you speak to, people you see on social media, it suggests that they're all under 35, if not under 30. They're smart, tech savvy, and they have the zest to learn ropes from anyone and everyone who has the patience to answer some very tough questions as well. So we conducted a poll that got over 1,200 responses, and the first one was, of course, to quantify the age profile of these investors. And that was startling because 8 out of 10 respondents were well below the age of 40, and nearly 1 out of every 2 were below 30. 46% of our respondents below 30. Well, a large chunk of the respondents have been active participants in the market for over 5 years. That's the nature of these polls, which attract those kind of people. What was startling here, that 4 out of 10 actually entered the market in just the last 2 years. 40% entering in just the last 2 years. The pandemic really has done something for the equity cult.
Yeah, Manglam, it seems all the money that they saved from not taking Ubers and Olas to go to office and a whole lot more they have invested into the markets. And, we're not the ones who are saying this actually. Upstocks claims that 7 out of its 10 investors of more than 4 million customers that it has are actually first-time investors, and they're under 36 years of age. It added about 2 million customers in the financial year 2021. 80% of them were in the age of 18 to 36 only. Zerodha, for instance, says that the average age of their users is between 25 and 35 years of age. Also take the case of Paytm Money. Now there, 80% of the investors on the platform are under the age of 35. If you look at small case, the number is even smaller. The average age of investors using small case today, that is only 28 years of age.
Well, that's the nature of that media, right? These apps were directed towards those guys. But we find out increasingly, for even traditional brokers, the age of investors is actually coming down. And these guys are extremely savvy. The savvy retail investors don't simply invest in mutual funds or ETFs. They actually handpick individual stocks and also dabble in something like cryptos, etc. We found out that over 40% of their respondents got their investing ideas, knowledge and insight from a lot of the social media posts as well. So influencers doing their bit. Of course, a lot of them do their own research as well. And a lot of them are actually investing serious amount of their income. Over a third of their income, 46% of the people, almost half of them, invest nearly 30% of their income. While they're investing serious capital, they're also in it for the long haul. While 74% said they're investing for the long-term returns. Let's see whether they stay on or not post one bear market. A fifth of the respondents also said that they entered the market because investing, one, was easier. Secondly, they had some extra cash during the pandemic. And thirdly, they recently learned about investing because all the other options were not as reward-giving, if you must.
It is, and you'd want to know where it's growing, right? It's not your usual Maharashtra or Gujarat intuitively that you would think of, but the penetration of the internet and accessibility of information has meant that investors across the country are participating in the markets now. Now take the instance of states like Assam, for instance. Earlier not so active in trading, they added 7 lakh investors in the last 1 year. That's a 200% increase in the number of active traders. Take your other states like your Madhya Pradesh, your Uttar Pradesh, Bihar, etc. They all saw anywhere between 60 to 90% jump in the number of active traders. So you wouldn't really have expected this, but that's what the pandemic has done.
Accessibility, you said it. So one wonders, right, how and why investing has become so much easier. We did ask our respondents how they invest, and more than half of them actually use apps like Zerodha, Grow, Upstocks, 5 Paise, all of them over the years, while traditional bank-backed brokers like Kotak, HDFC and ICICI. Access to financial markets has actually become easier, cheaper, more tech-driven. The user experience has gotten better. And if you club these apps with the UPI apps, nearly 7 out of 10 investors are using the discount brokers as well as the UPI apps to put their money to work.
And why not, Mangalam? Because today the options have really increased and investing is a whole lot easier than it ever has been. So your institutions from Mumbai seem to be losing their stronghold to techies from Bangalore. The space that was earlier dominated by the likes of your ICICIs and HDFCs and Motilal Oswals, the IIFLs and whatnot, is now the playground of the likes of Zerodha, your Grow, your Upstocks, your 5 Paise, your Samco. So, the space has really evolved, Mangalam.
It has evolved. I just take that Zerodha from here and put it out here, because Zerodha, with half the experience of angel broking, for instance, today commands the largest market share, 19%. Nearly 1 out of 5 people trade with Zerodha. Then the 555-year-old 5paisa.com has nearly 5% market share. Guess what? It's more than the market share of established players like Motilal. You have HDFC Securities, Kotak Securities, all of them as well. So definitely democracy in terms of access to the markets has happened. You have so many apps, Ritu.
Yeah, absolutely. And some of these didn't exist until, like you said, 5 years ago or so. So the nature of investing, the ways of investing, everything has gone a dramatic shift. And a lot of it, of course, we're able to explain with the numbers. But let's talk more about that, Mangalam.
Let's talk about the ways these apps function. The first lot is the execution apps. You have the early version of Zerodha, Upstocks, Grow. What they would do, they would just allow you to buy or sell on their apps. So that's the execution kind of apps. Then there is a whole host of other apps which provide both research, what stocks should you buy, what their analysts are saying, and then you can buy on their app. So research plus execution would be a fair amount of these traditional brokers out here. ICICI Direct has the app, Kotak Securities, IIFL. If you want just one app which has only the research and the execution, you use Zerodha's of the world, then you can go to Money Control, of course, Stock Edge. All of them provide just the research and no direct market access.
But you know what, Mangalam, if you want to club all of this together and you want a super app that'll take care of execution of equity, your research, insurance, mutual funds, payments, lending, I'm running out of breath here, you have the likes of Paytm and more apps that are coming up in this space. If thematic investing is the way forward for you, go for small case or FIREs. For all your non-equity related investments, that is crypto, your debt funds, your digital commodities, overseas investments, you have the likes of Wazirex and many more. Now, with all of these options on the table, how does one go about selecting the best possible option? That is a bigger question that we're going to be asking. What works? What does not?